Hello, and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is September 29th, 2025, and we're diving deep into Alphabet stock, ticker Google. There has been a whirlwind of overwhelmingly positive news for the company recently, and we need to unpack it before looking at the charts. First, Google scored what many analysts are calling a home run legal victory in its antitrust case in early September. The ruling on September 3rd avoided the worst-case scenario of a forced breakup of its business units like Chrome or Android. This removed a massive cloud of uncertainty that had been hanging over the stock for months. Investors reacted with extreme enthusiasm to this news. Following that, the company's AI model, Gemini, soared to become the #1 free app in the Apple App Store, even surpassing competitors like ChatGPT. This success was a major catalyst, proving Gemini's strength and potential to complement Google's core search business rather than cannibalize it. The combination of these events propelled Alphabet into the exclusive $3 trillion market cap club on September 15th, joining giants like Apple and Microsoft. The stock has gained approximately 33% this year alone, with an impressive IBD composite rating of 98. Just a few days ago, on September 25th, news also broke of a major AI hosting deal with Cipher Mining, further cementing Google's expansion and dominance in the AI infrastructure space. However, all of this is happening against a backdrop of broader market volatility, with concerns about Federal Reserve policy and a potential government shutdown. Now, let's see how this incredible string of news events has been reflected in the price action. Looking at the daily chart for Google, we can see a powerful uptrend that has been in place for most of the year. But the action in September has been truly explosive. Notice this massive green candle and gap up right here on September 3rd. The stock closed around $211 on September 2nd and opened the next day at $226, rallying to over $230. This move corresponds directly with the overwhelmingly positive news from the antitrust case resolution. This created a significant price gap between $213 and $225, which often acts as a major support zone in the future. Following this, the price consolidated for about a week before the next major catalyst hit. This huge rally on September 15th is a direct result of the news that Google had surpassed a $3 trillion valuation, driven by Gemini's success. The stock gapped up again and pushed to an intraday all-time high of $252.41 on that day. It continued that momentum, setting a new record high of $256 on September 19th. This $256 level is now the key resistance level to watch. It's the price ceiling that bulls need to break. Since hitting that peak, we've seen some healthy profit-taking and consolidation. The price has pulled back and is currently trading around the $247 mark. This shows the market digesting the recent massive gains. Let's zoom in on this key period to get a clearer picture of the news-driven volatility. Here we can see the September 3rd gap up very clearly, followed by a few days of sideways movement. Then, you can see the sheer force of the buying pressure on September 15th, which took the stock into a new price territory above $250. The volume on both of these breakout days was significantly higher than average, confirming the strength and conviction behind the moves. This period established a new trading range for the stock. The previous resistance around $240 has now potentially flipped to become a new support level. The price has successfully tested levels above $250, but has since fallen back below it. This makes the $250 level a key psychological battleground for the short term. Now let's switch to the 1-hour chart to analyze the most recent price action since the all-time high. Here we can see the peak at $256 on September 19th, followed by a clear downtrend over the next few days. The price found support around the $245 level on September 26th before bouncing slightly. Currently, the price is consolidating in a tightening range, which typically precedes a significant move in one direction or the other. For short-term traders, the bounds of this consolidation are key. We have resistance near the $252 to $253 area, which was tested and rejected, and support holding around the $245 to $246 zone. A break outside of this range will likely dictate the next short-term trend. Drilling down even further to the 15-minute chart, we can see the intraday battle more clearly. Notice the sharp sell-off on September 24th, where the price dropped from $252 to below $247 in just a few hours. The price then bottomed out on the 25th, with a low around $240.74 before staging a strong recovery. That recovery was very important, as it showed buyers were still willing to step in on dips. Since that bounce, the price has been making a series of higher lows, which is a short-term bullish sign. However, it has struggled to break above the $247 to $248 area with any conviction. This intraday price action paints a picture of indecision as we head into the end of the month. So, what's the verdict for Google, both short and long term? Let's lay out the cases. The bullish case is fundamentally very strong. The company has incredible momentum in AI, its primary legal threat has been neutralized, and its valuation reflects this renewed confidence. From a technical standpoint, the long-term uptrend is firmly intact. Bulls will want to see the price hold above the $245 support level and break out of the current consolidation to the upside. A sustained move back above $250 would be the first step, with a break of the $256 all-time high signaling a continuation of the powerful uptrend. On the other hand, the bearish case relies more on broader market weakness and the potential for significant profit-taking after such a historic run-up. If general market sentiment sours due to Fed policy or economic data, high-flying stocks like Google are often the first to see selling pressure. Technically, a break below the recent support at $245 would be the first warning sign. A more serious bearish signal would be a move below the psychological $240 level, which could open the door to a deeper correction towards the top of that big gap at $230. So, let's recap the key levels and offer some unbiased predictions. Your primary resistance is the all-time high at $256. Minor resistance sits around $250 and $252. On the support side, you have immediate support at $245, a stronger level at the recent low of $240, and major support at the $230 gap fill area. Our first prediction, with a roughly 60% probability, is that Google will continue to consolidate in its current range before making another attempt at the all-time highs. This scenario is reinforced by the strong fundamental news and becomes much more likely if the broader stock market remains stable or bullish. Look for a breakout above $252 as an early confirmation signal. Our second prediction, with a 40% probability, is that the stock will see a deeper pullback to test the $240 support level. This would likely be triggered by negative macroeconomic news or a broader market sell-off. A failure to hold the $245 support level would be the key indicator that this scenario is playing out. Looking ahead, keep a close eye on upcoming jobs data and any statements from the Federal Reserve, as these will heavily influence market direction. Of course, continue to monitor any news related to Google's AI development and ad business. That's all for today's analysis on Google. Thank you for watching Explain the Charts. If you found this video helpful, please hit the like button, subscribe, and ring the bell so you don't miss our next update.